Good morning, ladies and gentlemen. This is Market Forecast brought to you by Options University. It is Monday, January 20th, 2014, and I am Butch Shorak. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Oh, well, exactly what happened last week is we're over halfway through the month of January. And so looking at the indexes for the last week, looking at the Dow, the NASDAQ, the S&P 500, the Russell 2000 in that order, we see that as we look up and down the week's gains, we see that the only one with negative numbers is the S&P 500. And so looking at the amount of percentage change for the week, we see 0.1% for the Dow. We see NASDAQ up 0.5%. We see the S&P 500 down 0.2%. And with a rather modest gain, the Russell 2000 up 0.3%, showing us pretty much positive numbers this past week, except for the S&P 500. Looking at the year-to-date, we see finally kicking in our numbers, 0.7% down for the Dow, NASDAQ up 0.5%, S&P 500 down 0.5%, and the Russell 2000 up 0.4%. As we see very little happening so far in the first almost 3 weeks in the month of, the first 2 weeks in the month of January. January provides for us one of the indicators that some people like to follow. That is, as the month of January goes, so goes the overall market. But if we look at the last 18 years, 11 of those 18 years, if we had positive numbers out of the indexes for the first month of the year, then we ended up with a positive index or a positive year out of the entire market. One of the things that we see is that it is typical. 11 out of the last 18 years, we've seen that for the first half of the month has shown us a bit of weakness, and then but we're looking at for the entire month to find out the true index and what the January effect will be. So let's wait till the end of the month to decide what January is telling us about the rest of the year. One of those things that we can talk about is that every single down January on the S&P since 1938, there has been without exception, every down January has preceded a new or extended bear market, 10% correction, or at least a flat year. So it does provide us some indication of where we're going. Remember, we have an unprecedented market here, basically pushed on by a very, very easy monetary policy. Let's take a look and see what is offered us this week on economic announcements, which basically there's very little for us to see. Martin Luther King Day is Monday. Markets are closed. Looking at Tuesday, absolutely nothing for us to look at. On Wednesday, again, nothing for us to look at. Jobless claims coming out at 8:30, which is real typical of every week we see these numbers come out, and they are giving us positive numbers, but we have a smaller workforce than we've had in quite some time. PMI manufacturing coming out at 8:58. Existing home sales and house price index coming out at 10 o'clock, along with economic leading indicators at 10 o'clock. And then Friday showing us absolutely nothing for us to move the market. So not much happening this week in the way of economic announcements. Now let's take a look at the SPX and see what our overall trend is. And as it continues, here's the 200-day moving average with the 50 above the 200 and the 30 above the 50, giving us our uptrend, and we continue with that uptrend. Had a pullback during the last week, but notice that we immediately turned around and bounced up. Pullback took place Monday as Goldman Sachs announced that it was not all thought that we were getting a bit overextended as to our PE ratios relative to the overall stock market. But as you can see, in fact, let's look at a little smaller chart or a larger chart and see exactly what happened during the week. As here's the Goldman announcement, which came out during the week weekend, and it had the effect on the market on Monday with some rather heavy selling. And then the market again immediately turned up, went back to that 1850 number, which we said was one of our goals for the month of January, and it has certainly offered us some resistance as we now have a double top at that level. And we'll see what happens as we continue through the month of January. Basically, are we looking for new highs or not? We'll talk about that in the gold section. Now, looking at the Dow, we see that a little lagging strength coming out of the Dow. Looking at the last 6 months, we certainly have nice strength, continued uptrend, but we didn't get up to our previous highs out of the Dow as we were higher there than we were during this week. So a little bit of weakness out of the Dow as we showed not quite the same strength as overall market. Looking at the NASDAQ, what did we see? Well, we saw all new highs out of the NASDAQ as Wednesday, Thursday, and Friday the uptrend continues, and we got new highs showing us this great deal of resiliency in the NASDAQ market. All right, are we expecting some kind of a pullback? Well, we always expect the market to go up and down and up and down. Here's a pulls up, comes back to that 30, comes back to the 30, comes back to the 30, and so we expect this to happen. This is what markets do. Healthy markets have an ebb and a flow to them. Now, looking at the Russell 2000, we saw new highs again as the Russell showed us quite a week as we continued on up. Again, the big sell-off on Monday on the Goldman news, and then the market immediately found health and continued on up, giving us brand new highs out of the Russell 2000. What did this all mean to the VIX? Well, of course, we had a spike on the day that the market pulls back, one would expect. Let's take a look and see if that's the case. And we see there it is. On Monday, we got a spike out of the VIX. Certainly not at any great high levels, but it went almost up to 14. And now back in that 12 range where all seems peaceful on the Western Front. All right, let's take a look at some of our other sectors. Looking at the bond sector, let's see what happened last week, as basically we had a flat week in the overall market. Let's see what the bonds did, as the bonds actually popped up. We've got a bit of a breakout, headed for this high of 107.50. Our ETF for the bonds is the TLT ETF, and it gives us an indication of what's happening in the good old bond market. Certainly been in a bearish trend, and has certainly gone sideways in the last 5 months, showing us very little strength, but we're getting a little pop out of the bond market at this point, as we had a little bit of change in the Fed announcements as to pulling back on buying back on the bonds. Now let's take a look at the gold, and we see gold again sitting at a resistance point right at about there, and we'll see whether gold decides to break up. The safe haven of gold really has no reason when there's not a lot of doubt in the market, as the market just keeps chugging along, headed for higher highs and higher lows. Now, what kind of volume did we have during the last week? Well, let's take a look at our SPDR, our ETF, and see if we showed any extreme volume. And the biggest volume day took place on the Goldman announcement, but notice immediately after, just continued right on up, going up, hitting that resistance at 1850. Expect a little pullback here and see what happens as we go forward. The SPDR showing us only one big day of volume. That was on our mini sell-off, which took place on Monday, and then on average volume continued on up. All right, looking at the financials, XLF, we'll look at that. We got new highs out of that early in the week, and then a bit of a pullback following the overall market, and certainly showing nice volume as we got into those highs. So XLF showing us good strength. As long as we have this low interest rate where the financial institutions make the kind of money they make, we'll see a continuation of that XLF continuing on up. It's a buy on any kind of a pullback whatsoever until we have a complete change in the economic background. Looking at oil, let's see what oil did, as we got new lows out of oil last week, and then had a little bit of a bounce off that, as the oils had a crossover there, and on the 30 and the 50, and is in what looks like a bearish market, as we see the 200 above the 50, above the 30, and showing us a downward trend out of oil. Every time you have a spike in oil, until we have some kind of change, until the trend changes, this is in a downtrend. All right, so that's the market as it looked during the last week, looking at our individual sectors, looking at our individual indexes, giving us a good overall view, understanding we're in the month of January, looking for some kind of indication on where this is going to lead us for the coming year and what kind of things to expect. We are going to hold off an opinion on that until we look at the entire month of January, looking at this January effect. We had a positive Santa Claus rally, and we'll see where we go from here. With that, those of you that are gold members, stick around. We'll look at our stocks to watch. And for those of you who would like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. With that thought in mind, thank you for being here. This is Market Forecast from Options University. It is Monday, January 20th, 2014. Market closed today. Abbreviated trading sessions during this week because of our closure of the market on Monday for Martin Luther King Day. And this is Butch Shorak telling you thank you for being here.